I now hand the conference over to Mr. Prateek Jagtap from E&Y IR. Thank you, and over to you, sir.
Thank you, Aman. Good day, and welcome to the Q1FY24 earnings call of Onmobile Global Limited. Representing the management today, we have FC, Executive Chairman, Sanjay Baweja, Managing Director and Global CEO, Ashish Chatterjee, Global Group CFO, Biswajit Nandi, Chief Business Officer, and Radhika Venugopal, Vice President, Finance. The call will start with brief update about the overall performance during the quarter by Sanjay Baweja, which will update on financial, which will be then followed by FC speaking on overall business activity and sharing his thoughts on future plans. We will then open the floor for Q&A session. I would like to mention that some of the statements made in today's call may be forward-looking in nature and may involve risks and uncertainties that we see. For a list of such considerations, please refer to the earnings presentation. Onmobile Global undertakes no obligation to publicly revise any forward-looking statement to reflect future or likely events or circumstances. Having said that, I now hand over the call to Mr. Sanjay. Over to you, sir.
Thank you, Prateek. Good evening, everybody. I'm really happy to interact with all of you once again, and I thank you all for taking time to join us today. Hope all of you are doing well. The results and presentations are already hosted on our website, and hopefully all of you have had a chance to look at them. As always, I will give a brief update on the products and business, and then Ashish will take you all through the highlights of our financial performance. Let me start off by saying that this has been a really good quarter for us. Though the revenue growth is modest on a sequential basis, we have managed to improve our profitability significantly, and we will try to continue with this momentum in the coming quarters. Let me quickly jump to the update on Challenges Arena. This quarter, Challenges Arena sales saw marginal revenue growth due to slow revenue ramp up from our new operators. Also, marketing optimization is taking slightly longer than expected to maximize revenue and profitability. During the quarter, however, cumulatively 54 customers went live as against 42 in Q4 of FY23, reflecting an increase of 29%. In terms of revenue, CA has grown 2x year on year, and it has increased 22 times in the last 9 quarters. Further, in Q1 FY24, 7 new customers agreed to our Challenges Arena and taking our overall cumulative agreements to as high as 73. We expect the momentum to continue and these cumulative agreements to reach around 81 by the end of Q2 FY24, driven by successful outbound sales effort resulting in increased sales. We continue our discussions with potential customers around the globe currently, and including, if we were to include our existing partners, we are in conversation with more than 120 customers as we speak. As of Q1 FY24, out of the 73 customer confirmations, actually 57 are new logos, which is 78%. And this clearly highlights our accomplishment as well as our potential for future cross-selling opportunities with these customers. In terms of usage and actual consumers, cumulative gross paying subscribers at the end of current quarters stood at 21.34 million as compared to 17.56 million at the end of March 2023, a growth of 22%. We are targeting to touch a figure of 24 million plus subscribers by the end of Q2 FY24. We are continuing to see healthy pipeline and expect to be live and sign more clients in the coming quarters. Challenges Arena's net active base saw steady growth from 3.1 million to 3.5 million at the end of Q1 FY24. We are targeting to touch 3.74 million subscribers in Q2 FY24. This quarter, we experienced some slowdown in CA revenue due to delayed launches. As we said, we are using the second quarter to really consolidate our positioning across with some of our customers who are changing their business models. But we are sure with many new customers joining the CA platform, we will emerge even stronger in H2. I'd like to emphasize that this is a subscription business and that revenue will continue to improve as we add more and more subscribers. Indeed, we believe that Challenges Arena will significantly boost our revenues in the coming H2 and beyond, and will give us better profitability, and our exit for Q4 is targeted to be much beyond the current levels. We are currently in the investment phase, as mentioned in previous earnings calls, investing in growth through disproportionately high marketing spend, particularly in the new geographies or operators with which we are constantly going live. We expect Challenges Arena to generate an EBITDA of more than 30% in the coming quarters, as you know, which will boost our profitability even further in the next couple of quarters. Coming now to Onmo. As of Q1FY24, we have 25 customers who've confirmed for this product, out of which 10 are already live. We expect cumulative agreements to reach around 32 by the end of Q2FY24. Revenue grew by 18% quarter-on-quarter basis and close to 13 times since its inception. Our focus has been to go live with more and more telcos efficiently and smoothly. We have crossed the 600K live subscriber mark and are expected to go up to 1 million within the next few quarters. We are significantly improving the product in terms of the B2B support, the onboarding, the progression mechanics, and more features to promote deeper engagement and long-term retention. Prospective customers continue to show significant traction. In FY24, we anticipate generating much higher B2B revenue. Let me also give you now a small update on GameEyes. As of Q1 FY24, we have 2 customer confirmations in this segment. As you're aware, we've just kind of launched it. We have a robust deal pipeline for this new segment, and we expect to see healthy growth in the customer confirmations in the coming quarters. Now, I would want to talk about the mobile entertainment section, mainly tones and video. Videos saw a decent 5.2% growth on quarter-on-quarter basis due to increased subscriber base in the Europe region. Infotainment growth on a sequential basis due to increased contests in India and Middle East. Tones slightly degrew on a quarter-on-quarter basis due to some amount of forex impact and lower subscriber base in one of the operators. Simultaneously, we've been able to cross-sell our business to new logos which we've acquired through CA, and we are positive about some more customer agreements happening in the coming quarter for the mobile entertainment business. We will be going live with some of the new customers that we've acquired, and we expect that to happen by the end of this quarter or early next quarter. So clearly that revenue is going to happen for our business. One of the other things that I want to talk about is the organizational transformation, which has helped us increase our profitability this quarter. As was mentioned in our most recent calls, we wish to continue this performance in the coming quarters, which will help us meet our revenue target of greater than 600 crores for FY24 with higher margins. Also want to take this opportunity to highlight here that the 28% GST, which is applied on online gaming, will not have much impact on our gaming business, as our products, first of all, do not come under the real money gaming, and also our gaming growth actually is coming more and more from global customers where this is absolutely not applicable. Now, before I pass on to Ashish, let me re-emphasize that we have our battle cut out on 3 fronts. First being revenue, second is profitability, and last but definitely not the least is cash. I believe that we've started on our revenue growth and our products are leading, the new products are leading the charge. It is a matter of couple of quarters when you will really see solid numbers on that front. Our profitability, on the other hand, has improved, and we are unlikely to see any volatility on that front. On our cash, while we've been investing on new products and marketing, and you've seen that our cash reserves have depleted, we are at the threshold where we will start increasing our cash from H2 onwards. So all in all, I can assure you that our H2 is targeted to be far superior to H1 on all the 3 parameters which we as a company are focused on. With this, I would like to hand over the call to Ashish to talk more about the financial performance. Thank you.
Thank you, Sanjay. A warm welcome and thank you everyone to join us on this call. I'll share the key highlights of our financial performance for the first quarter ended June 30th, 2023. In terms of Q1 FY24 performance, we reported a revenue of rupees 139.6 crores, marginally up by 3.8% on a quarter-on-quarter basis. Gross profits witnessed a healthy growth of 10% on a YOY basis to rupees 77.1 crores, and gross margin improved by 437 basis points to 56.3% on a YOY basis. On our gaming business today, Challengers Arena and Onmobile put together, we have now 98 contract confirmations and 64 live customers. This is up 3 times on a year-on-year basis. Our gaming revenues today constitute 18% of our total revenues, up 2.5 times on a year-on-year basis. Our mobile entertainment business remains steady and very profitable. We saw upsides in Europe, which helped in the revenue growth. On the cost front, manpower cost is reduced by 13.3% on a quarter-on-quarter basis. Operational costs are also reduced by 15.8% on a quarter-on-quarter basis due to cost optimization efforts. We continue in our efforts to improve efficiency and productivity. These reductions in the cost have resulted in improved EBITDA for the quarter, which stood at rupees 12.3 crores, up by almost 6 times on a quarter-on-quarter basis and 58.5% growth on a YOY basis. EBITDA margins for the quarter are at 9% as compared to 1.6% last quarter. We reported a PAT of rupees 9.8 crores, up by 138% on a YOY basis. PAT margins for the quarter is at 7.2%. Overall DSO stands at 119 days for quarter 1 FY24. In terms of geographies, Middle East and Africa registered the highest growth at 16.2%, followed by Asia and Europe, growing at 2.7% and 5% on a year-on-year basis. During this quarter, we also incurred R&D or product development expenditures of around 17.8 crores as we continue our foray into the B2B space in gaming. With this, I will now hand over the call to FC.
Thank you, Ashish. Thank you all. Last quarter we discussed the big changes and streamlining that we did in the company. Clearly it shows in one quarter. You can see right away the people cost went down. We streamlined the operation to make sure we could actually have a bigger output on number of operators that go live. You see it right away in the chart. We used to do 7, 10 operators a quarter for both CA and Onmo. Now we're at 18 going to 20 a quarter, and we should be at 20 average a quarter for a year. 20 a quarter for a year, that's 80 operators going live this year for both CA and Onmo, which is quite huge. We never did 80 operators in 23 years history with Onmobile launching whatever kind of service. Now we're really focused and streamlined on getting this operation out. So congrats to the team for being able to do that change, which operationally was key to do, because obviously it's one thing to sign an operator, it's another thing to make the service live and then capture the revenue. So it's a 3-step process. We sign the operator, we get it live, and then we capture the revenue by investing in marketing. And it's key to invest in marketing at the good ratios also, so that we don't waste money, that we're sure that we do it in a smart way, and that we show the profitability, and that's exactly what we did this quarter. So congrats to the team on this. When we see an overlook on the year, mobile gaming will be 25% of our revenues or more. The big change this year is now getting, both CA and Onmo are getting with scale. As both Sanjay and Ashish talked about, the profitability is there, the size is there, activating the number of operators that we're talking about. Now we're in the hundreds. With our target by 2025 to be at 200, it does create a lot of scale. But the big change also is that we go from a 3-year investment where we all know we invested a lot of money into building this gaming products to now being pretty much break even soon. And next year all products will be break even or generating EBITDA plus the EBITDA of mobile gaming. Of mobile entertainment. So the two combined, it's two positive versus one, dragging down the cash and one putting the cash. We also optimize operation and mobile entertainment, which clearly shows a good profitability. So overall, I think we were in a very good situation to capture the year 24 and enter the year 25 next year with very good profitability. So I thank the team for all the support on getting this done. And to this, we'll open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Anyone who wishes to ask a question may press star and one at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to our participants, please press star and one to ask a question. Anyone who wishes to ask a question at this time, they may please press star and one. The first question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Hello.
Yes, Deepak, go ahead, please. We can hear you.
Thank you very much, sir, for the opportunity. So first up, I just wanted to understand on this new products, right? Challenge Arena and Onmo. Now, this quarter, I think our revenue from Challenge Arena has not seen any growth, right? Largely, it has been flattish on a quarter-on-quarter basis.
So, no, growth has been there. It's a modest growth in terms of absolute percentages. But I think what is more critical is the focus on profitability. As we are consolidating our model, we continue to grow in terms of our revenue growth.
Mm-hmm. So what was our absolute number in Challenge Arena revenue?
So it's 187 million in terms of revenues for Challenge Arena. It's 1.2% growth for the quarter.
Understood. Fair enough. But I think we have been talking in the past as well. I mean, these two products can be as big as our traditional legacy business, right? Which is around 500 crores. So are we still holding on to it? And how many years you think it might take to reach that kind of scale in this in these particular products?
So we had given that thought, and we still maintain that, and that was a 3 to 5 year outlook that we had given, and we believe that we will reach that space.
Okay, so it's already been, I think, 1 to 1.5 years, right, since we spoke. So
yeah,
from
Onmo
today
has just started. Onmo, we've just we're still at the in a sense we are at the beta stage. But yes, CA we've just started 1.5 years ago, and remember. This is the traditional business or our mobile entertainment business consists of 3 products which have been there for the last 20 years. So clearly, we want to upstage this, and we believe that we will upstage these numbers as we go along.
Correct. So as we stand today, from today, I mean, what, 2 to 3 years? 3 years would be a fair kind of an estimate to, target that kind of scale for these 2 products?
Yes. 3 years would be a good time scale to target these.
That's what we're targeting together, right? Challenge Arena plus Onmo.
Correct. Initially together, and at some stage maybe each.
Mm-hmm. Okay, understood. And in your opening remark, you did mention that the profitability that we have seen in the first quarter is kind of a sustainable, and we will look to improve upon that as we in coming quarters, right?
Yeah. So our clear target and our belief is that our H2 is going to be much better than our H1. And yes, I think we will have very little volatility as far as our profitability is concerned. The only change we see is that H2 being more superior than H1.
We are talking in terms of profitability or revenue?
Profitability, absolute profits, all of that.
Mm-hmm. Okay, that's very good to hear that. And in terms of your traditional business, I think that has also seen a decent growth, right? I mean, this quarter saw a decent growth of maybe 9 to 10% on a quarter-on-quarter basis. So how do we see that the traditional business going forward?
So, like we said, the videos has shown good growth, and we believe that will continue. The tones business, we last time we had said that we've acquired new customers in LATAM, and we expect them to start generating revenues towards Q3 and then Q4, of course. So we believe that Q3 and Q4, even the tones business will also start growing pretty rapidly. So overall, at the year level, we should see growth in our tones and video business.
Okay. And if I may just add, on the mobile entertainment business, we have focused a lot on building efficiencies and productivities. So whatever growth now we'll see on the mobile entertainment side is directly going to go to the bottom line. So that's one big part. And on the gaming side, we have a very good gross margin. So gaming per se, as it scales up in terms of marketing and net ads, again that will translate into a very good steady state margin. And today, with 98 contract confirmation between CA and Onmo, we are clearly nearly halfway down to our vision or objective that we had articulated a few quarters back. So on both the fronts, we are moving in line with what we had estimated before.
Okay. And a couple of final questions. Now on this recent government ordinance on GST of 28% on online gaming, does it have any impact on us?
So, first of all, our India business is small, very small as compared to our global business. So that's the first aspect. Second, if you've read that circular and the details are still to be out, but very clearly said that they will put the GST on the money which the person bets. In our case, there's no betting. We are not in real money gaming. So the betting amount from our side is always zero. We only have some winnings, etc., on which there could be a possibility, and we'll know once the circular is out, the rules are out, that the GST will be on some part of the winning and how we have to calculate. So our belief is the impact will be minuscule because there is no chance of a person putting money in and losing it to GST. So that aspect is not there as far as our business is concerned. So therefore, we don't believe it may have a major impact on the overall thing.
Understood. And understood that. That's pretty clear. And I mean, for this year at FY24, at the company level, what sort of revenue growth we might be looking at?
We've our stated position is that we should top the 600 crore mark, and that's what we are sticking to. How much over that we go, we don't want to call it out. But that's our aim is to go beyond the 600 mark.
Fair enough. Understood. Yep. That's very helpful, sir. That's it from my side. All the very best. Thank you.
Thank you. The next question is from the line of Kumar Saurabh from Scientific Investing. Please go ahead.
Hello, sir. Am I audible?
Yes, you're audible.
Sir, I have 3 questions. So the first question is, we are in the gaming business and we have 2 products and one more product we launched. But basically, I want to understand around the product. Do we develop the games or do we develop the platform? And why I'm asking is because games have their own shelf life and product life cycle. So in case we are creating the games, do we need to continuously build new games? How does it work? If you can give some insights on the operational level. The second question is more on the overall total opportunity size. And in one of the quarters, you have hit upon this point that it's not only about 200 operators, but the total subscribers. But is it like a Pareto which works here where, when we have 100 operators already there, we have captured 80% of the market, or how we should look in terms of penetration? And third question I have is the kind of business we are in, it's very disruptive, right? When it started with VAS in 2005. So as a company, how we look to ensure that we don't get disrupted?
We had contests and we graduated onto gaming, and clearly we will continue to innovate and continue to get new products as the market evolves. We will continue to be on the leading edge as we go along. So I think maybe Nandi can talk about the opportunities and subscribers, etc., and then maybe if he can also speak.
Yeah, hi, Sanjay. So on the opportunity side, everybody who uses a mobile internet is our target segment.
Sorry to interrupt you. You're not audible enough. Can I request you to come closer to the mic?
Better?
Yes.
Yeah.
Go ahead.
Okay, great. Thanks, Ajay. So, in terms of the way we look at our targets is twofold. First is the operators that we sign up. That's number one, right? And then when we sign up an operator, in that operator, there's a gaming segment that we cater to, right? Now that varies from operator to operator, and that is our segment of consumers to whom generally we market our products, and through, let's say, a Google or a DSP. And then we
Mr. Nandi, sorry to interrupt you again. Your voice is breaking.
I think what we do.
So we are still unable to hear
let me jump in.
Vishwaji.
Yeah.
Let me jump in on this.
Yeah.
So obviously, as Nandi was saying, the first step is to sign the operator. The second step is to make sure that they're live, right? That we do the onboarding of the operator, and then we can spend the marketing in the right way to make sure that we get the subscribers. And you're totally right. At the end, you need to get a lot of subscribers so that they're paying subscribers, so that we can make the revenue and the profitability. The challenge just on onboarding, and I'll get back to Onmo also, is Onmo has way more, is a way bigger integration than Challenge Arena. That's why we have the two products, right? Challenge Arena came out of our contest business, where we did digital contests and we added quiz and puzzle, and then we focused on the quiz and puzzle app. It was an app that works easily on any operator, that you're a 3G operator, 4G operator. It works for everybody, and that's how we got Challenge Arena deployed faster in the market than Onmo. Onmo, if we recall, we used the opportunity of having 20 years expertise on phones to deploy servers within operator. And if you look today at 5G, to do 5G cloud gaming, you need to do edge. You need to have servers on the edge. And basically, servers on the edge is servers within the telecom operator. So if you see it this way, we've been doing edge computing for 20 years, right? Deploying servers in telecom network operations. And using this and using the fact that there was no pure play mobile gaming service for 5G operators, we invested a lot in the cloud gaming and 5G mobile cloud gaming solution, which is Onmo today. When we pitch to an operator today on 5G, we're the only provider that brings a solution for a mobile-first solution for 5G. And obviously, for this to work, as a full 5G service, we need to deploy gaming servers into the telecom operator. This is the link back to the phones business of being able to install phone servers. Now we're using the same team to install gaming servers. That's why when you look in terms of pickup on the market, if you look at number of operators we signed up with Challenge Arena versus Onmo lagged a year and a half after CA because it was way more complicated technically to do. To remind all investors, we have two core technologies to make Onmo work. We have our own cloud gaming technology to be able to do snapshots So start any game at any point and do a mobile moment of the game. And we have an AI technology to read the stream live, the video, and decide who's the winner and stop the moment so we can decide who's the winner. So you need to start the moment and end the moment. So those are two technologies that we own that are 100% owned. We have the only patent in the world to do mobile moments on gaming, on any game. So we can take any game on the App Store and create mobile moments with this. And this is what 5G operators find very, very interesting. And I must say, even in America, right now we're in discussion with most operators here in America, Canada, and USA, and nobody else is talking to operators for mobile gaming on that specific service. So when I'm back on activating the operators, when you see, that's why I was mentioning the importance of being able to scale up the number of operators that go live. You see that now we move from a situation where Onmo was very little operator going live, 1 or 2 a quarter, to now we're forecasting about 10 in the coming quarter, which is almost the equivalent or the equivalent of Challenge Arena. So that's the first thing that's changing in when we talk about scale, making the revenues. Now, once you get the operator live, we need to get the subscriber live. And as Sanjay was mentioning, 57% of the new operators that we're signing are new operators in new markets that we don't know. Before, when we were activating, Challenge Arena operators, we were really live with tones or with something else in the market, so we knew how to acquire subscribers was the right mix for the marketing. Now, what we realize, we have to be careful. We can't just enter a market and drop a lot of money, because it will not convert to the same metric and will waste money. And a lot of companies are wasting money on marketing. And the last thing we want to show you is a nice graph, going with revenue skyrocketing up to the air, but more marketing costs than revenues coming in to get these revenues. So the management's been very smart in being able to manage how much marketing do we put in the market and what's the output. And if it takes 1, 2, or 3 months to get this tuned up, well, let's take the 1, 2, 3 months to tune it up before, so we don't waste money, so that we can balance profitability while we get the user count. Let's finish with your question. When we will have all the operators in the platform, when we say our target's 200 operators within 2025, and they're all optimized in the market, the revenues that will be generated by both Onmo and CA on an optimized basic in 200 markets will generate a lot of revenues compared to what we have today. So I hope that answered the question.
Sure. Thanks for such a elaborative response, and wish you all the best for the coming quarters. Thank you.
Thank you. The next question is from the line of Kawaljeet Singh from Bajaj Finvestments. Please go ahead. Sorry, Balaji Finvestments. Please go ahead.
Congratulations for the good set of numbers. My query is regarding your investment in Chingari, and in the last presentation that you provided in Q4, there was a mention of GameZ, but there is no mention of the same in the current presentation. What has changed in the way?
So, okay, let me try and answer that. As far as Chingari is concerned, they are working well. I think they've got some investments recently from Aptos, which is one of a tier 1 blockchain company. So our belief is that they are continuing to hold discussions. And we expect that something will come out more as far as the Chingari is concerned over the next maybe couple of months or something. So we expect them to continue their discussions in terms of raise that they are doing as of now, and also in terms of their future profitability. So we are fine as far as our investment is concerned. I think the valuation at which they are is far greater than what we've invested the money at. So that's one. The other aspect in terms of GameEyes, I did mention in what I said that we've already got a couple of customers. We're talking to about 20 more people across. And this is, we've just kind of launched it. So last time we wanted to make you aware of the product per se, and therefore it was part of the presentation in that sense. But beyond that, to repeat the slides and say, oh, you know what, this is the product which we've already told you last time, we thought let it get substantial in terms of numbers, and then we'll start, putting a slide to it. There's nothing more about it except that since we had introduced the product last time, we put a couple of slides for it last time. But now the real crux is to capture the market. And once we reach to a stage where we think it's significant enough, because this is just the start of the launch, so we will come back and give numbers also.
Okay. Thank you very much.
Thank you. The next question is from the line of Aisha Doshi from TMS. Please go ahead.
Hello, sir.
Yes, go ahead, please. We can hear you.
So can you tell us more about your online gaming business? In the past quarters, it was negative, and in this quarter, it turned positive. So can you tell us more about it?
So, as I mentioned, we have 3 products on our gaming side: Challenges Arena, Onmo, and KMIs, which is recently launched. But looking at the older business, C and Onmo, today we have 98 contract confirmations, and it's a global business, reaching out to the telcos across the globe. And we have seen rapid growth. Today it constitutes roughly 18% of our top line, and it's only going to become bigger. Expecting it to be quarter of our top line very soon. And few quarters back, we had articulated our vision that we want to kind of be, with 200 operators globally with our gaming products. And I think we are working in line or committed to that path of, on the gaming side. So the gaming business is a 90% gross profit or gross margin business, and at a steady state, it can deliver 30% EBITDA. Today, we are investing in this business as we put in the marketing dollars to acquire customers and scale them. So today, they will be, some bit of, lower profitability. But as we scale up the customers we have already acquired, we'll see rapid change in numbers both at the top line and the bottom line.
Thank you. So, if possible, sir, can you share us your 3-year gaming vision?
Sure, we'll do that. We'll take down your number and we'll share that separately with you.
Okay, thank you.
Thank you. A reminder to our participants, please press star and 1 to ask a question. The next question is from the line of Hiten Borisha from Sequent Investments. Please go ahead.
Yeah. Thank you for the opportunity, sir. So firstly, I want to understand on the margin side. As you mentioned, we have around 30% EBITDA margins in the gaming side, and this gaming as a whole contribute 18%, or the challenge arena part contributes 18% to our sales?
So let me just correct what we've been saying. We're saying that at a steady state, Challenges Arena and even Onmo will have an EBITDA of 30%. So that's one thing that we. As of today, both between Challenges Arena and Onmo together constitute 18%, and we believe that by the end of this year it should be closer to 25%. But we've not. Please also remember, like FC also mentioned and Ashish has been saying, we've not reached that steady state as of now. As of now, we are investing disproportionately more in the marketing side, and therefore the profitability is not at that level. We have still Onmo, we've kind of at the beta stage, so there's still investment and capitalization happening. But we believe that over the coming quarters we will see. And the operating leverage is so high. Ashish just mentioned about 90% gross margin. So the operating leverage is so high that once we scale it up a little more, suddenly we'll have much higher profitability, and therefore we expect that at the exit, for example, at the end of the year, we will be highly profitable as far as Challenges Arena is concerned, and on Onmo also we will become profitable. So clearly, 30% is the steady state profitability of both the products, but we are not there yet as far as the profitability is concerned. But having said that, the profitability that we were attained for the company as a whole, I think from here to as if we were to compare ourselves in H2, we believe that our H2 will be far superior than our H1 in terms of profitability and revenue both.
So a margin in H2, can it touch to like double-digit kind of margin, which we used to do like in 2021 or something? Can we do 10 to 12% kind of margin in H2?
Well, I don't want to give numbers, but yes, that is a very, very good possibility.
And majority of this will be contributed by this gaming segment, right, sir?
So gaming and our please remember Ashish had just mentioned our mobile entertainment business is now also, because of the efficiencies that we've been able to bring about at the end of the last quarter, even that is far more profitable now. So we are actually in the mobile entertainment we are at beyond 15% in terms of our profitability. It's because the other two businesses, like I just said, we are investing disproportionately in terms of marketing, and therefore they are still very low or negative. We are getting this lower number. Otherwise, our mobile entertainment business has now crossed the threshold of 15% profitability.
So if you can share what kind of percentage we are spending on this marketing, just wanted to understand if we this cost declines, how it will going to impact positively impact our margin.
So roughly 85% of the marketing spend that we today do is concentrated towards our gaming business.
Okay.
While in value terms that number may not fall down, but as the revenue scale up happens, as I mentioned, there are so many signed operators and they are becoming live and getting scaled up. As that number starts climbing up, this percentage to revenue ratio will decline rapidly. It will directly translate to our bottom line.
Understood. Yeah. Thank you.
Thank you. Any participants who wish to ask a question at this time, they may please press star and 1. The next question is from the line of Patrick Matthias as an individual investor. Please go ahead.
My question on fee is already answered. Thank you.
Thank you. Anyone who wishes to ask a question at this time, they may please press star and 1. The next question is from the line of Chetan Dhruva as an investor. Please go ahead.
Yeah, thank you for the opportunity. So my question is on the EBITDA margins that you will do for the full year. So my understanding from this call and the previous calls is that the traditional business, that is excluding gaming, the business excluding gaming, does around 18% EBITDA. And I was hearing from you, if I have understood that correctly, by the end of the year, you will probably be able to do around 2 to 3% even on the gaming side. And gaming will contribute 25% of the revenue, and the rest will be from the traditional business. So that would be the right understanding for me to get a handle on what will be the EBITDA margins for the full year?
Yeah, that's right. As you rightly articulated, mobile entertainment is at that steady 18%. We are adding new customers even in the mobile entertainment business. And while our the scale up on our gaming business is also going at a rapid pace, and we should see healthy exits by quarter 4. So our numbers or EBITDA margins should be
okay, the blend should be as I put it. Got it. Thank you very much, and good luck for the subsequent quarters.
Thank you. The next question is from the line of Ashish Mehta from Mehta Color House. Please go ahead.
Yeah, hi. I just had a question regarding the marketing expense. The marketing expense that we've incurred in this quarter, are we likely to have a similar expense in FY24 in all the quarters? Or is it going to increase with every quarter in this year? And what about next year also?
So, In absolutes, certainly it is likely to increase. There is no question about that. But as a percentage of revenue, so first of all, let me just segregate the two aspects. One is the gaming revenue, and one is the the mobile entertainment business. So as a mobile entertainment business, marketing spend is very stable and it's very low as compared to the gaming. Like Ashish was mentioning, 90% of our spend is towards the mobile entertainment, is towards the gaming side as far as marketing is concerned. Marketing as a percentage of mobile gaming will continue to come down, but in absolutes, since the overall mobile gaming revenue will continue to grow, the marketing spend will also continue to grow. So I hope you get that. We will get lower percentages, and therefore the profitability percentages will continue to increase, while on absolutes it will continue to grow, because our overall revenue from gaming will continue to grow. So what we were 13% of revenue a couple of quarters ago in terms of mobile gaming, we will be, like we are saying, 25% towards the end of the year. So that percentage overall will continue to, so you will notice that as an overall number, the percentage will keep growing, because two things are happening. Mobile business itself, the gaming business itself is growing, and therefore the percentage will look different.
Okay. So do you have a target in mind when you said this marketing expense yearly, or?
I wouldn't want to target a number, but clearly we believe that as a like I said, as a percentage of revenue for mobile gaming, it will continue to go downwards. We will, could be in our 50s in terms of percentage of revenue, could go down to much lower in the 40s. So the entire decrease will go straight away to EBITDA.
And that decrease, substantial decrease, do we expect by FY25 or in 24 itself?
So it is a continuous process. If you were to look at the last 4 quarters, so it has come down by about 8-9%. If you look at, it was at 65-66% down to in the 50s. Our belief is as we mature and the customers are 12 months to 15 months in the network, we believe we will be into the 40s. So maybe 3 or 4 quarters, and we should see closer to 50 and then completely below.
Okay. Thank you so much. Thanks a lot for answering the questions.
Thank you. The next question is from the line of Kumar Saurabh from Scientific Investing. Please go ahead.
Sir, I have 2 more questions. So one question, as you said, in the 5G gaming area, you are the only company. And we know gaming is like one of the high growth areas. So what is the reason there are no such companies? Is there some barrier to entry, or what is the reason? And why can't the telecom company, they create their own gaming platform? That is first question. And the second question is more on the P&L side, where if we see basically employee expenses and other expenses are the two key expense items. And then in other expenses, it's the marketing expense. So if you can give some idea on the employee expense side, how much are, direct variable expenses, how much is like a fixed expense. Basically, I'm trying to look between the breakup between the traditional mobile entertainment business versus the gaming business. And there was a write-off which happened last year. I think it was 9 crores. So how did it happen, and how do we ensure that it doesn't happen again?
So while Ashish will also chip in terms of finer details, I think, broadly, if you were to look at our numbers, if you were to follow our numbers, we were broadly at the level of around 50% gross margin overall business, right? And out of that, the 2 big expenses that we have is marketing and people. Yeah. At one stage, we were at about 32-33% manpower cost in terms of percentage of revenue. And now we are very close to 20. In fact, this quarter we are 20, but otherwise it's about 22-23%. So that 7-8% decrease that we've been able to do passes on directly into the profitability. So that's one aspect. Marketing, on the other hand, we've at what, if you look at a couple of years ago, we were at about 7-8%, and that's now gone to about 18%. So clearly, but that's because mobile gaming is the bigger growth area, and like Ashish mentioned, we are disproportionately investing in marketing currently. But having said that, slowly and steadily, like I just said to the last question that was asked, that marketing as a percentage of revenue is continuously coming down, and therefore over time this overall expense will become steady and we will have much higher gross margin. If you notice, our gross margin is moving up. We were at 48, we used to be at 48%, we are now at about 56%. So our gross margin is going up while our marketing is also going up, but now steadily it will start stabilizing, whereas our gross margin will continue. So we expect our gross margin, as we increase the revenue from gaming, our gross margin to be closer to 60 and then beyond. So clearly that's how, and if our manpower cost, which is fixed, what you just said rightly, if the manpower cost remains at 20% and our marketing cost is at about 40% or 20, today it's 18, maybe it goes to about 22, 23, because the percentage of revenue for mobile gaming will increase. We'll still have a healthy chunk available for other OPEX and more importantly for EBITDA. Did it answer your question a little bit or got
Yeah, sure, sir. That answers. And there were two more questions around why there is no other company in this area and regarding the bad debt return.
I'll let FC talk about it a little more. So
thank you, sir.
FC, please,
Yeah. As we know, mobile operators is a niche market in some sense, right? So being in this for 20 years now, in 2019, this journey started, right? We did the acquisition of Appland, and if you recall, we were doing games with mobile operators. The challenge we had was that the service was very not user friendly. You had to download a game, you had issues on your phone to get the downloads, and that was the basic service on mobile phone. So all the other cloud gaming solution went directly online, directly for PC gaming, where they use the console or big titles and actually stream them on cloud gaming. Nobody took the effort to do one more step and say, okay, let's do 5G, cloud gaming, and let's add really the component of moments, right, of cutting out, a bit like the trend of TikTok, where you have very snapshot of videos. We do the same for gaming. So we did a lot of efforts and investment in that sense, where cloud gaming companies stayed cloud gaming companies, mobile gaming companies stayed on the App Store, but nobody focused on trying to combine 2-3 technologies like we did and really address what would be the best 5G cloud gaming service out there. And that's why today when we discuss to operators, there's no one else with a competing solution. They have cloud gaming solutions, they that they use for their Wi-Fi for hardcore gamers. But as we know, 79% of all people with their mobile phones play on their phone. Those are casual gamers, they're not hardcore gamers. There's it's a 10x number of casual gamers versus pro gamers. So the market is really, really casual. And we created a platform that really combines short gaming with social and esport. And that's how we actually managed to be the only one in the market to offer this. So today, when we actually are in discussion with mobile operators, no one else has a pure solution for casual mobile gaming on 5G. And even on Challenge Arena, there's not that much competition. So that's really the reason why we're the only one. I'm expecting eventually to have some competition, but there's a first mover advantage that makes a huge difference. When you sign up all the key operators in the market first, well, it's long-term contract, so you're there first. And we did file a patent on being able to create moments on the game. So again, if you want to do short gaming moments, well, we have a patent for it. So I'm expecting competition one day, but today we don't have competition.
Sure. Thanks a lot, sir. And if you could answer the last question, the some amount which was written off in the year 22.
That was, the app. We had a subsidiary which had a earn-out reversal that was, written off. The acquisition that we had made internationally, so that was written off.
Okay. Okay. Thank you, sir. Thanks a lot.
Thank you. Ladies and gentlemen, that would be our last question for today. I now hand the conference back to the management for the closing remarks. Thank you, and over to you.
Thank you all. Look forward to discussing. It's going to be first or second week of November, so I mean lots will go through by that time, and look forward to share our results back then. So thank you all for supporting the company, and talk to you soon.
Thank you very much. Ladies and gentlemen, on behalf of Onmobile Global Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.